I was overcomplicating my trades, and these are the kind of results I got. In this video, I'm going to show you exactly how my trading evolved from confusion to consistency. The same framework I now use to take structured trades, and the same process my students are using to finally see progress. Subscribe if you're new to the channel. Now, let's dive right in. When I first started trading, I honestly believed that more tools will make me a better trader. More indicators, more strategies, more signals. But what I really had was more confusion. My charts were messy, my entries were inconsistent. Some weeks I'll win, some weeks I'll give it all back. And the worst part was, I couldn't explain why. I wasn't lacking motivation, I was lacking structure. I wasn't bad at trading, I was bad at running a process. I had no clear session rules, no repeatable execution model, no system I could trust under pressure. So every trade felt emotional, every loss felt personal, and every win felt random. If that sounds familiar, trust me, I've been there. But everything changed when I stopped looking for more strategies and started building a system I could repeat. I cleaned up my charts, I simplified my execution, I focused on one main setup, not 10, not 5, one setup. I defined when I trade, what I look for, how I enter, where I exit, and how much I risk. And that's when consistency started to appear. Not because I suddenly became a better predictor, but because I became a better operator. Consistency didn't come from better predictions. It came from better structure. Last year, I called out a bullish move on gold, and gold gave us our setup with a precise entry point, and it rallied all the way to our profit. I also had a bearish outlook on oil. Whilst oil was trading at about $65 per barrel, I predicted that oil was going to fall to $55 a barrel. It eventually did that, and I showed it here on this channel. I also made predictions on CAD JPY and Euro USD, which all played out, and a lot more, which are all documented on this channel. Now here's the pattern. I'm not guessing, I'm not chasing, I'm executing the same model over and over again. This is what repeatable executions look like, and not random wins. And honestly, the biggest win isn't even my trades. It's seeing traders finally understand what they're doing. People who are stuck for months finally seeing structure, finally trading with confidence, finally stopping the emotional overtrading. Not because they found a magic indicator, but because they built a framework. The biggest win isn't my trades. It's watching traders finally trade with clarity instead of hope. Now, let's drive this home and look at the market right now. I'll be looking at just two pairs, AUD/USD and GBP/USD. Now, let's start with AUD/USD. Now, I usually start my analysis from the monthly time frame. The first thing I look at when I come to a chart on the monthly time frame is to see the direction of the market. So all I'm checking out on this chart is where this market is heading. Are we going up or are we going down? So basically, are we trending or are we ranging? I ideally want to trade a trending market. I don't want to trade a ranging market. Now, looking at AUD/USD clearly, we can see that on the monthly time frame, we've got two trend lines, the major trend line right here and the inner trend line right here. So the inner trend line is bearish and the major trend line is bearish. Now, that being said, we can see clearly once I zoom in that the inner trend line has been broken right about here. So the inner trend line got broken there, and not only that, a major key level, which is this weekly level, has been taken out. Now, before this happened, I came on here a few days back and showed you guys what I thought about AUD/USD and why I am looking at that level as being a contentious level as to my intended direction for AUD/USD. And I made it known that it's only until we do break above this green level right about here, which is the weekly level, that I'll be interested in trading AUD/USD short term to the upside. Now, AUD/USD has done that, and that's why I'm actually interested in this pair. And if you don't know why I'm actually interested in this pair, look at the clues I looked at for AUD/USD. First and foremost, we have an inner trend line right here. So if we just go over to the weekly time frame, we can see that this trend line, which looked like an inner trend line on the monthly time frame, is actually a bigger trend line on the weekly time frame. And basically, structure, we can see here that firstly, we had a candlestick reversal pattern right off a monthly zone. So this candlestick reversal pattern right off a monthly zone saw AUD/USD to the upside. And not only that, if we come over to the daily time frame, we can see that this is a very well developed bullish trend. Now, coming back to the weekly time frame, I didn't want to trade this to the upside. I only like to trade where there's clarity. So usually I like trading from zone to zone. So I have seen that AUDUSD is going up like so and has created a trend line, a bullish trend line on the daily time frame. Now all I waited for is for this level to be taken out. Why is this level important? It's a weekly level and we've had reactions in the past here, and price action right about here that qualified this level as a key level. So now we have broken above it. You can see that we're on the weekly time frame and we have had a strong weekly bullish candle close above the zone. So what does that say? Simply, all I wait for is a proper retest of this zone. So I usually trade a break and retest strategy. So now we have broken above this zone like such. All I'm waiting for is when the market will come back and retest this zone. Ideally, in the lower time frames, that is where I'll be taking my entry. So this is how I am positioning for AUDUSD. This is the same model I've used for those trades I told you, and they all played out. It's happening again, and this is how I will be positioning for AUDUSD. So once we do hold there, I'm going to take this trade to this zone. And why am I stopping here? Because simply this zone is a monthly zone, so it's a major key level. Now let's go to GBP/USD. Now we are currently in a trade on GBP/USD and we have already started locking in our profits. You can see how massive the trade has gone. We've already locked in our profits right about here. I'll move our stop loss to break even like so, and our trades are running to the upside. So this particular trade idea was talked about in my previous video. In my previous video, I did mention this setup. I was like, if we do sustain above this daily zone and take off this trend line, I'll look for entries in the lower time frames. So this is how I got into this trade, and the first take profit was right about here. So we took our take profit, our first take profit at the 100% retracement, and the trade has gone all the way up. The next target for GBP/USD will be this black line right about here. And if we go over to the weekly time frame, we'll see what this black line signifies. So in the weekly time frame, we can see here, going back in the past, this was a head and shoulder that saw GBP/USD to the downside, and this black line was, I'm just going to make it thicker. So this black line was simply the neckline, of this head and shoulder pattern. So I use the line, not because a line is convenient. Do not use lines for your key levels. You use zones as your key levels. But because I'm not dwelling much on it, I'll just use a line for now. So I'm just telling you now that that's why I am taking my profits, my take profit right about there. So what was the idea behind GBP/USD being bullish? Simple. We'll start our analysis from the monthly time frame as usual. So the first thing I've done on the monthly time frame is to see the direction. We can see that we had this trend line right about here, and GBP/USD broke above it and became bullish. Simple. Then the weekly time frame. The weekly time frame, which usually gives us structure, and then also we check out for any kind of chart patterns that want to conflict with what the high time frame, the monthly time frame is saying. So now we are bullish on GBP/USD. We don't see any chart pattern as such. Rather, we saw clean price action play around here. So what happened here was, by the time GBP/USD created this higher low, which was higher than this one, so it just simply meant that the market was ready to go back to the upside. When that happened, I came here and told everyone that I just only want GBP/USD to break above this level and sustain above this level, because simply we're using the break and retest strategy. I don't enter markets on breaks. No, I never entered this market when you did break here, because the problem with just only trading the breaks, your stop loss is going to be wide. But if you wait for the market to properly retest, you will have a better stop loss. If it's a bullish market, your stop loss is going to be the last higher low. If it's a bearish market, your stop loss is going to be the last lower high. That makes things easy, and that makes your stop loss little. So that was exactly what was applied here. And you can see that not only did we get a good setup, we had a candlestick reversal pattern right about here that played out. In hindsight, if you look at this looks somewhat like a Morningstar pattern, in my own opinion. So after this formed, it was a no-brainer, and I knew that GBP/USD was going to soar to the upside. Now it's done that. What are we seeing for GBP/USD? Like I said, I'm not going to be touching this trade because we're already on this trade and we've already started looking at profits in. I gave this out in my Telegram group that if they are on this trade, you should start locking in profits. And I'm sure they had me. So that's it on GBPUSD. The next target for GBPUSD is 1.36926. So here's my entire framework in simple terms. One main setup, one execution model, strict risk rules, and consistent review and journaling. That's it. Professional traders don't look for more signals. They look for more consistency. Consistency is not talent. Consistency is structure. If this style of trading makes sense to you, and you want to learn this framework step by step, I teach this exact process inside my free Forex masterclass. In that class, I break down how to read market structure, how to build directional bias, how to execute clean price action setups. So you're not just copying trades, you're actually understanding what you're doing. And for traders that want my exact execution rules, my chart templates, and the full price action framework I personally use, that's what the price action quick start is built for. It's designed for traders who are tired of guessing and want a clear, repeatable process. The link to the free masterclass is in the description of this video. Start there. Build the foundation, and when you're ready to take your execution seriously, the price action quick start is there to speed that up. I've got a catalog of videos to show you how I view and trade this market. If you're interested in learning more, watch this video right here.